There are exactly 36 of them on Earth right now. 36 people whose crypto holdings are worth more than $1 billion. Not 36,000, not 3,600, 36. And the thing that makes their story different from every other kind of billionaire in history is that most of them did not build a company to get there. They did not inherit a fortune. They did not spend 30 years climbing a corporate ladder. Most of them bought something early. Bitcoin at under $1, XRP at fractions of a cent, Ethereum before anyone outside a developer community had ever heard of it, and they held it. While everyone around them laughed, while the price crashed 80% and the forums declared it dead, while their friends and family asked why they were still obsessing over internet money, they held. And one day, they woke up and the number in their wallet had more zeros than their brain could process in one sitting. So what actually happens after that moment? What does the day-to-day life of a crypto billionaire actually look like? Not the fantasy version, not the yacht and champagne Instagram version, but the real version. Because the real version is simultaneously more extraordinary and more complicated than anything you have probably imagined. And understanding it might change the way you think about what you are actually building toward. Let's start with the morning. Because the morning is the first thing that changes, and it changes in a way most people do not expect. You wake up, and before you do anything else, before you brush your teeth, before you make coffee, before you check your messages, you check the price. Not because you need to, you have more money than you could spend in 4 lifetimes, but because the habit that made you wealthy in the first place, that obsessive, relentless tracking of the market, does not turn off when the number in your wallet hits 10 digits. It becomes more intense. Because now the swings are not 10% gains and losses on a $1,000 position. They are 10% swings on a $1 billion position. That is $100 million gained or lost before breakfast. And there is genuinely no way to be psychologically prepared for what it feels like to watch $100 million disappear in an afternoon and then come back the next morning. You can tell yourself you are a long-term holder. You can tell yourself the fundamentals have not changed, but the primitive part of your brain that registers loss does not speak in fundamentals. It just sees a number going down, and it fires the same stress response whether you have $1,000 or $1 billion. This is documented, not anecdotal. The psychology of extreme wealth, particularly sudden, volatile extreme wealth, is one of the most studied phenomena in behavioral finance, and crypto wealth is its own specific category, because unlike a tech founder who built a company over 10 years and saw their net worth grow gradually, crypto billionaires often crossed the threshold in months, sometimes weeks. The human brain is not equipped for that transition. Studies on sudden wealth syndrome show that the majority of people who acquire wealth rapidly report significant anxiety, paranoia about losing it, and difficulty maintaining normal relationships. The number changes, the psychology does not keep up. Now let's talk about the practical reality, because the life itself, the infrastructure of being that wealthy, is genuinely extraordinary in ways that go far beyond what you see on social media. The house comes first, not one house. Several. A primary residence in a low-tax jurisdiction, Puerto Rico, Dubai, Singapore, Portugal, the Cayman Islands, because the first conversation every crypto billionaire has with their tax attorney ends with the same advice. Where you live determines how much of this you keep. The United States taxes capital gains regardless of where you move them, but many countries do not. Puerto Rico's Act 60 program gives U.S. citizens who establish genuine residency there a 0% tax rate on capital gains from assets acquired after establishing residency. Dubai has no income tax and no capital gains tax at all. Singapore's capital gains on crypto are tax-free. This is not tax evasion. This is the completely legal, completely documented life decision that almost every person who crosses a certain wealth threshold makes. You restructure your life around the geography of your money. And for crypto billionaires specifically, whose wealth exists in digital wallets that can be accessed from anywhere on Earth, the geographic restructuring is easier than for any other kind of wealthy person in history. Then comes the security conversation, and this is the one that nobody talks about publicly. When you hold $1 billion in digital assets, you are walking around with the private keys to a fortune that can be moved to any address on Earth in under 10 seconds with no possibility of reversal. That makes you a target. Not theoretically, actually.
Crypto kidnapping, where victims are held and forced to transfer their holdings at gunpoint, has occurred on multiple documented occasions. Ledger's customer database was hacked, and the personal addresses of hardware wallet users were publicly published. The physical security requirements for someone holding 9 or 10 figures in crypto are genuinely extraordinary. Multiple cold wallets stored in different locations, multi-signature setups requiring 2 or more keys to authorize any transaction, personal security details, social media silence about location and routine. The privacy that most people assume comes with wealth is actually harder to maintain at this level because the assets are so portable and so irreversible. You can have $1 billion and be genuinely afraid to tell anyone. The team comes next, because at $1 billion, managing the portfolio is itself a full-time enterprise requiring a team of professionals. A family office, which is essentially a private investment firm set up solely to manage one family's wealth, costs between $1 and $5 million a year to operate at the level required for a $1 billion crypto position. That team includes a chief investment officer to manage diversification out of crypto into traditional assets, real estate, private equity, venture capital, a tax attorney in every jurisdiction where you have holdings or residency, an estate planning attorney to structure how the wealth transfers across generations, a cybersecurity advisor to manage or suppress public profile, and an accountant who specializes in crypto taxation, which as of 2026 remains one of the most complex areas of tax law in the world because the rules are still being written in most jurisdictions simultaneously. The diversification question is the one that keeps every crypto billionaire up at night, because the wealth was created by concentration, by putting everything into one asset and holding it through every imaginable adversity. But holding everything in one asset after you reach $1 billion is genuinely dangerous position. A single regulatory decision, a single network vulnerability, a single market collapse can take your net worth from $1 billion to $100 million in weeks. It has happened. It happened to people who held through the 2022 crash without taking profits. The wealth management answer is to diversify aggressively into real estate, into equities, into private companies, into physical assets like gold and art. But the psychological answer, the one that the brain keeps generating at 3 in the morning, is to hold. Because the coin got you here. The coin is the thing you understand. The coin is going higher. The conviction that built the wealth does not naturally evolve into the diversification discipline required to preserve it.
Now let's talk about the relationship dimension, because this is the part of the story that almost nobody in this space ever discusses honestly. When you become worth $1 billion in crypto, your relationships change. All of them. The friends who laughed at you when you talked about Bitcoin at $10, they are not laughing now. And the new dynamic between you is uncomfortable in ways that cannot be fully resolved. Some of them want something from you. Some of them are angry in ways they cannot articulate. Some of them treat you differently, deferentially, carefully, like they are walking on glass around you. And the authentic ease of the friendships you had before the wealth is gone and cannot be fully recovered. Family is more complicated still. Extended family members who barely knew you before suddenly have business ideas and financial emergencies and opportunities they would like your perspective on. The boundaries required to protect your wealth from family extraction are the same boundaries that damage the relationships. And the question of how to raise children with the values of patience and discipline and delayed gratification that built the wealth, while those children grow up in a world of private jets and unlimited resources, is one that every wealthy parent wrestles with, and none of them solve perfectly. The purpose problem is the quietest and the most profound, because the thing that kept you going through the bear markets and the doubt and the years of people telling you it was all going to zero was a goal, a number, a vision of the life you would have when the number in your wallet was big enough, and then you hit the number, and the goal disappears. And you discover, as every person who has ever achieved a massive financial goal discovers, that the arrival is not the same as the imagined arrival. The account has the number. The restlessness is still there. The need for meaning is still there. The need to build something, to matter, to have a project worth caring about, none of that is resolved by the money. It just removes the financial version of those problems and reveals the ones underneath. This is why almost every crypto billionaire eventually starts a foundation, funds a cause, launches a new venture, or gets deeply involved in the politics of the industry they got wealthy in, not primarily because they are altruistic, though many genuinely are, but because the human need for purpose does not retire when the portfolio hits 10 digits. It just looks for a new container. Jed McCaleb co-founded Stellar to serve the unbanked and then started an aerospace company. Vitalik Buterin donates hundreds of millions and writes philosophy. Chris Larson became one of the most vocal advocates for regulatory clarity in the entire crypto industry. The wealth creates the freedom. The freedom reveals the question of what you actually want to do with a life when money is no longer the constraint. And then there is the twist, the thing I promised you at the beginning of this video. The thing that is simultaneously the most predictable and most revealing detail about what it is actually like to be a crypto billionaire. They still check the price. Every morning. Before coffee, before anything else. The person sitting on $1 billion in XRP, who could live for 3,000 years on the interest from their treasury bills alone, who has a team of professionals managing their diversified family office, who has not needed to worry about money in any practical sense for years, still wakes up and opens the chart, still feels the specific anxiety of a 3% red candle on a Tuesday morning, still reads the analysis, still follows the wallets of the other whales to see what they are doing, still has opinions about the next support level and the upcoming macroeconomic event and whether the Fed decision will move the market. Not because they have to, because the habit is them. The obsessive attention to the market is not a strategy they employed to get rich, it is the character trait that made them capable of holding through every crash, every doubt, every moment when quitting would have been the rational decision. You cannot separate the attention from the person. The $1 billion and the compulsive chart checking are the same thing expressed in different forms. So here's the honest picture of life as a crypto billionaire. It is extraordinary. It is free in ways that most people never experience. It is also anxious, complicated, psychologically demanding, and far less resolved than the fantasy version suggests. The money solves the problems that money can solve, and it reveals with complete clarity every problem that money cannot, which turns out to be most of the important ones. And somewhere in that reality, in the gap between the imagined life and the actual one, is probably the most useful thing you can know about why you are really in this market, not just for the number, for who you become while building toward it. That matters more than the chart, even if you still check it every morning. If this gave you a perspective on wealth that you didn't have before, smash that like button right now. These kinds of honest, grounded takes are the hardest to find in this space and the most worth sharing. Subscribe if you want the real story behind the numbers, not just price predictions and hype, but the actual human experience of what this market creates and what it costs. Now here's your comment. If you hit $1 billion in crypto tomorrow, what is the first thing you would actually do? Not the fantasy answer, the real one. Drop it below. And send this to someone who thinks that enough money solves everything. It's a conversation worth having before you find out the hard way. The wealth is real, so is everything it cannot fix.